Greetings, members, one and all of the Salivation Nation. Silver beat them all in a strange way. Let's explore. Silver is certainly acting pretty strange today, but it's good news for those of you who are silver bulls out there. But of course, you know what that means. We could be setting ourselves up for quite a bit of disappointment and considering the volatility of silver, but let's celebrate today anyway. Well, here is the strange activity that has occurred today in the precious metals space. As you can see, all of the metals are up, save for gold. This is quite unusual. It has happened before. I've actually covered this before as to seeing gold actually go down while silver goes up. And you can see that silver beat them all of the precious metals today. Gold is down almost a third of a point, and platinum and palladium are up almost a percentage point for platinum and over 1.5 percentage points for palladium. Look at that. And so we can see the gold to silver ratio is at 77.29. So this brings us into more of a comfortable territory from what most of us think it should be. I would think the gold to silver ratio should average out at about 55 to 65 for the gold to silver ratio. But likely that's not going to happen anytime soon unless we see a big breakout or activity like we've seen today continue. So exactly what's going on here, let's take a look at it from a technical aspect first from FX Empire. We have a rally during the trading session on Tuesday to pierce the resistance just above. If it can break out above the top, then it can bring more momentum into this market. So people are looking for momentum, several days of this activity happening. We're going to capture and we're going to cover exactly why this occurred today, which is a little bit odd as well, and considering other factors that are into play. Silver markets have rallied during the trading session on Tuesday to reach towards the $23.50 level. This is an area that, of course, is a major resistance barrier. We need to break above there and perhaps even close above there in order to get higher. All things being equal, the 200-day exponential moving average is sitting at roughly the $24 level. And that, of course, makes quite a bit of sense as a target and an area of trouble. If we can break above there, then obviously the silver really starts to pick up momentum, and it is likely we could be looking towards the $25 level. You know, in theory, we could get up there fairly quickly. We have in the past. And this could be the beginning of something either really good or just a blip, and we could see it go right back into reality soon. If we pull back, it's likely the bottom of the candlestick is for the trading session from the technical analysis standpoint on Tuesday should offer support. All things being equal, this is a market that will be very noisy, but pay attention to the U.S. dollar, as a falling U.S. dollar could turbocharge silver and send it much higher. Now that is interesting. If the dollar does fall, in other words, the dollar index fall, we could see it climb up dramatically. A stronger dollar means weaker silver prices. And 22 level, dollar level underneath has been major support for sure. We have seen it go under to the $21.50 level in the past, but it's becoming less and less likely as we see the prices stay above that $22 level and hug the 23 mark. Again, we're looking at the prices, and it is now comfortably above $23.50. It's now $23.60. So then we get into the reasons why we are spiking because of above $23.50 after weak U.S. data. Now, that is not a temporal designation. It is a typo. Weak, W-E-A-K, is what they meant to say over here on FX Street, as we reference here. Silver spot prices spiked nearly 60 cents from under $22.90. It's actually above that now to above $23.50. In a recent trade in the wake of a much weaker than expected January New York Fed Manufacturing Survey. The headline index slumped into negative territory for the first time since October 2020 versus expectations for a decline from 31.9 to 25.7, which is a reflection of Omicron short-term hit to business conditions. At current levels, just below the $23.50 mark, it is now trading higher at nearly 2% on the day. So there it is. So it's the negative territory for the manufacturing index there, and silver's recent rally, which has seen the precious metals rebound from its 21-day moving average at $22.80 and scorch above the 50-day moving average of just under $23.20, cuts against the moves being seen in bond and FX markets. Bond market participants, unfazed by the weak New York Fed survey, have continued to push U.S. yields higher and focused instead on increasing hawkish Fed expectations. Yes, and the 2-year yield has pushed above 1% for the first time since February 2020 and is up about 6 BPS on that day, while the 10-year is up 8 BPS and trading around 1.85, which is its highest level since January 2020. This move is being driven by real yields rather than inflation expectations and would typically weigh on precious metals. And so therefore, I think that's why you're seeing silver rise and gold not, because the yields obviously have an effect as well on the precious metal markets, but especially gold. Gold is very sensitive to the dollar. So amid in the rise of U.S. yields that has outmatched the moves in yields in another development markets, the U.S. dollar has been catching a bid, and the DXY, overcoming initial post-New York Fed data weakness, has pushed back to weekly highs above 95.5, which means that's why gold didn't go up. Silver ignored that for some strange reason. This is a very odd situation, and it shows the psychology of the markets and how they're translating here. That makes dollar-denominated precious metals more expensive for the holders in international currency, weighing on demand, and would thus typically send silver prices lower. Higher real yields and a stronger dollar suggest the most recent push higher in spot silver may be short-lived. If intraday swing traders do take the opportunity to add short port positions and elevated levels above $23.50, they will likely be targeting a rest of 2 days and last Friday's lows in the $22.80 area. So we could definitely see it go back as we celebrate today. And again, we're looking at it. Silver is comfortably above that $23.50 level here. Gold is still low. Silver is a metal that will continue to perplex us, I think, and we could certainly see it move back in the other direction. One thing we do want is essentially, for those of us who want to stack, obviously we want lower silver prices as we continue, so that we can continue to obtain and acquire silver. But if we're going to see it move up, we want to see it move up gradually and steadily. Silver has not been operating in that way. Usually it spikes up and dramatically a few days, and then people get all emboldened about it, and then it just goes right back down to where it was, if not lower. And I think that is what has frustrated many in the space, in the precious metals space. We'll see how it plays out, but nonetheless, the best thing we can do is to just continue to accumulate these metals as much as we can with the budget we have, with the understanding of what we're buying and understanding the premiums and what we can get back out of our silver if we need to sell over the course of a span of time. Silver is not one of those metals you want to just buy and sell and flip for bullion. Now, there are collectible coins that you can flip and make out on, but typically that it works pretty much independent of where spot price is. But there is the market. It is interesting how silver has essentially beat them all today. Every metal out there, silver has beat. And usually it follows on the coattails of gold. But the strange thing today, because of manufacturing data, is that silver beat out gold. Gold went down, silver went up, and it ignored the other factors. Platinum and palladium both up as well. Very interesting times indeed. We'll see how things play out. For those of you who are silver bugs, don't look too much into this. Be prepared for a smackdown to come, potentially. We'll see. Or maybe not. We'll find out. There you have it. Let me know what your thoughts are in the comment section below. I would like to extend a multitude of gratitude to you all for taking the time to watch this video, and to encourage you, strongly encourage you to please rate this video. That means press the thumbs up button, not so hard that you end up breaking it, so that you can use it again for the next video. Share it with other members of other social media platforms. Comment and subscribe.